Swing trading is a very popular concept within momentum traders. But the more I talk to people, the more I realize that there is a varied difference when it comes to the definition of what exactly do we mean by swing trading. Now, if you look at my screen, yesterday we posted something on YouTube posts asking that what should be our next video. Essentially, I'm asking our followers that what kind of video would you like me to create next? And almost more than 60%, 61% votes came to swing trading strategy. And so on this very rainy Monday evening, I just thought that let me pour out my thoughts. Uh, what do I see by the exact meaning of a swing trade? And with that thought, let's share a simple swing trading strategy with you in this video. So come join me. Let's learn a simple swing trading strategy. All right. The first thing to understand is that any strong uptrend or any strong downtrend, they do not go parabolic one way up and one way down. They generally go in an ebb and flow manner. That is, they go significantly up, come down a little bit, which we call retracements, correction. They go up a little bit, they take a pause, and they go up. I always take the example of my drive down from Mumbai to Pune in my Mumbai days when I used to live there and work. And I always remember that we used to drive down past the toll naka, wait for around 10-15 minutes, refresh, stretch ourselves, and then head to Pune. And the same way back from Pune to Bombay. A 2.5, 3 hours drive was broken down into one or two breaks of around 10-15 minutes, which means that if the chart or the prices have to travel from A to B, it will also take a little bit of a breather. These short term corrections, these short term retracements are what we call as pullbacks. Now, what about swing trading? From where did we get this word swing? Now, pullbacks are an integral part of this swing trading. If you go over the internet and search about swing trading, you will probably get time based definition of swing trading. I'm pretty certain. Time based definition means swing trading is defined by something which is not an intraday trading, means the trader has to take it as a positional trade, and the average holding periodicity is more than 1 day, but on an average 3, 4, or 5 days. Or in other words, a short term positional trading. This definition is in terms of time. There is another probability of defining swing trading in terms of the chart or in terms of the structure, and this is where this pullback comes into play. Now, the way I look into swing trading is once the chart has established a strong uptrend, it will definitely wait for a while, a breather. That is a pullback. That is where it will do the opposite of what it has been doing. So if it has been going up, it will fall. Or if it has been falling, it will go up. So it will do the opposite of the primary trend. And then it will get ready for the next swing, for the next leg on the upside. Now, this swing, this leg on the upside can be an exceptionally good looking one like the one we are looking at on this chart, or may not be. But if we put this together, this is essentially a short term positional trade which lasts for on an average 3 to 5 bars or 3 to 5 candles, which means that if you do it on a daily chart, if you try and find it on the daily time frame, it will be a trade for 3 to 5 days, on the weekly chart 3 to 5 weeks, and so on and so forth. Right? So essentially, swing trading is trying to capture the next swing on the upside or on the downside, provided the primary trend is still intact and you've gone through a short term correction. Now, hopefully, you've understood what is quote unquote swing trading. Can we quickly create a swing trading strategy? The swing trading strategy requires few ingredients. Ingredient number one is a strong trend, existence of a strong trend, the strong uptrend, let's say in this case. So we have to define a strong, nice, good looking uptrend. Then we have to define the pullback or the retracement or the correction. And the pullback and the correction should be such that it should not be a deep one, should not be a deep one. Means you don't want the primary uptrend to get compromised. The trend should be intact. That is extremely important. And fourth, the emergence or re-emergence of buying or selling. Means I'm in an uptrend, I'm going through a short term correction. The short term correction has not compromised the underlying uptrend, and I start to see emergence of fresh buying. And now I can expect for the next 3 to 5 candles or bars, I can expect a swing move on the upside or on the downside. This is the thought process, these are the ingredients. Now, for the definition of a strong uptrend, you can use anything, combination of EMAs, you can use super trend also. Let's use a super trend. For a pullback, you can use simple candles, you can use Heiken-Ashi the way I'm using it, or you can use stochastics or RSI. RSI will be a brilliant indicator for pullback. And to be not to be a deep one is means that when the retracements come, when it is coming down, your trend indicator should not reverse. And then finally, emergence of buying. To put this in perspective, this is the Ashok Leyland weekly chart. Today afternoon, late afternoon, I was looking at multiple auto and auto ancillary charts, especially because recently they have kind of started to trend really well. We cannot discuss the current market conditions, but to discuss the swing trading concept with you in this video, I'll use a super trend. Let's say I go to indicators, I type super trend. Now you would have noticed one thing, that I am on my Heiken-Ashi charts. I love Heiken-Ashi charts because they wonderfully, in a very simple manner, average out price and smoothens out. Whatever I'm showing you in this video, you can use it on bar charts, on candlesticks also. But I feel the efficacy is better, stronger on the Heiken-Ashi candles. So I'm on the Heiken-Ashi, and for the sake of trend, I have plotted the super trend. The super trend has plotted, and it has been plotted with its default parameters of ATR length and factor. On the Heiken-Ashi candles, I generally prefer 1-1 for short-term trend as well as stop loss management. Both. If you do not want stop loss management from the super trend, then you can use something like a 2-1 or a 3-1 depending on what kind of parameters you're using. 2-1 is pretty good, pretty smooth for the trend. So let's say I keep 2-1. All right. This is on the weekly time frame. So step number one is, where and when does my super trend reverse or reverses? That's the emergence of an uptrend. And of course, at that time, I would love to see what is the structure of the Heiken. If you followed any of my work, you know this is a strong Heiken-Ashi candle, which shouts out that it's a strong uptrend. So from the point of view of super trend and from the point of view of Heiken-Ashi, it has been checked that we are in an uptrend. All right. Now, whenever you see an opposite colored Heiken's shaping, these are all pullbacks, pullbacks, pullbacks. Means after this move, we can expect reemergence of buying and the next move on the upside. So in an uptrend, it will be red Heiken-Ashi, or in a downtrend, it will have to be a blue Heiken-Ashi. Once you get the Heiken-Ashi, you know that I am in an uptrend. I am pulling back. This pullback can last for 1 day. This pullback can last for 3 days. So I have identified a pullback. And now the fourth point is, you have to wait for the re-emergence of buying. Re-emergence of buying means the color of the Heiken has to go back to its primary color. In this case, it is a strong uptrend, so it has to turn blue. The moment it turns blue, you can use the high as the entry point and use the super trend as the stop loss. That's it. That's how simple it is. Please understand, any trading decision, any investment decision, or any life decisions are taken at that point considering the parameters which you are dealing with. Of course, we expect the best of the results out of all our decisions in trading, investments, and in life. But at the age of 46, I can share this with my young viewers that that's not exactly how it plays out, both in the markets and in life. So, do your best in terms of your preparation and your definition, your risk management, your discipline. The outcome is not in your hands, so do not try too hard. What I'm trying to mean, long story short, is once you have entered the trade with the stop loss, the rest is in the hands of the market. It can lead to a fantastic move and you can keep on trailing the stop loss and trend follow. You can quickly exit once you get a 2 3 day candle move. You can do anything as long as you are well defined and disciplined. This is just one way of a swing strategy. We can create n number of different ways, different combination of indicators, or even without indicators. We can do it with actual raw price action also. But if you want to create a well structured strategy which talks about clarity of the entry, clarity of the initial stop loss, clarity of trailing stop loss, so that your trading strategy system is complete end to end, it's good to use simple, useful indicators like super trend, high Kanashi, or maybe another combination of RSI. But I hope my objective of this video, thanks to everyone who had voted out of that YouTube post, was to share what exactly is swing a trading strategy per se. And with an example, this is what you should look out to do. Define the strong uptrend, define the pullback, wait for the reemergence, and take your entry. This entire structure should be well defined and well structured for you so that your trades, when you take the trades, you're not too bothered, you're not too anxious. You just have to follow the rules in a disciplined manner. I hope this helps. Do let me know with your comments. It really, really means to me. Thank you for watching my work. Thank you for following my work. Till then, take care of yourselves and trade well.